Palantir dropped some big news on us in the past couple of weeks, and it will have a huge impact on the company. Whether you're a new investor, or if you've been an avid follower of my channel and you jumped on board with Palantir a few years ago, then you're going to be happy with these new changes. And I'm also going to cover some of the gossip around Palantir that may add even more value to the company. As a reminder, Palantir is up over 73% year to date, while the S&P 500 has stalled out with only up 1.9% for the year. Palantir has both retail investors and institutions pumping up the stock price because we see the long-term value of the company. Frankly, most of us early retail investors saw the potential way before those big-name investment firms even knew who Palantir was. And the concern with everyone investing all at once into Palantir is that the overvaluation of the stock, where analysts see the stock price with a negative 23% trajectory for the next 12 months. And the reason they have it so low is because the price to earnings ratio is at a 581, where the average in the S&P 500 is at a 20, meaning that Palantir is over 30 times above the average for its PE ratio. But what would it take to have its PE ratio come down to a 45? Well, that means that its earnings per share needs to increase from 23 cents up to $2.80 a share. And I realize off the cuff that that doesn't really sound like that much. But that means their total earnings would need to be $6.8 billion, which is a lot more than their current $460 million. To level set expectations, if we begin next year with Palantir growing 35% each year, then a realistic PE ratio of 45, similar to nvidia, then it would reach a market cap of $300 billion in 2 years. And as a reminder, its market cap today is $300 billion. And that's me being optimistic that they can increase their earnings in order to drop down that PE ratio. Granted, there are several big names that are extremely bullish on Palantir. In plain terms, in order to justify its current valuation, Palantir needs to increase their earnings per share because it happens to be the denominator in the PE ratio. So as the earnings climb, the PE ratio falls. And seeing as how their free cash flow more than doubled in Q1 of this year, they are ruling their financials like a boss. Before I move on, if you get any value from my channel and feel that I've earned it, it would mean the world to me if you would press the like button so my content can continue to grow. The second item Palantir needs to do is double their capacity to bring on new customers. And the reason that is so important is because Palantir's existing customers make up 88% of their revenue today, and their net dollar retention is at 124%. Now that means that their existing customers are expanding their purchases with Palantir and buying features and options over and above their initial scope of work. This data point alone should scare every major software company that is competing with Palantir, because the customers love the investment into Palantir because it makes their businesses more efficient while driving down their costs. It goes without saying that Palantir in the long term is worth its weight in gold. And gold is a sector that has been on fire this entire year, where it's up over 30% year to date. But the gold mining stocks have a big gap of opportunity to catch up, which brings me to our sponsor, Gold Mining Inc., which is a company that holds one of the largest gold and gold copper resource stage mineral portfolios in the Americas. They own approximately a dozen projects across 5 pro-mining countries, featuring an estimated 12.4 million ounces of gold equivalent in measured and indicated, and 9.1 million in inferred categories. What makes Gold Mining Inc. important is its solid financial foundation, including a portfolio of publicly traded equities valued over $150 million, which exceeds its market cap. Plus, they have $6.8 million in cash. This financial strength is complemented by their large-scale gold projects located in mining-friendly jurisdictions across the Americas, which are crucial for the industry's need to replenish our gold reserves. The company also benefits from an experienced leadership team with support from top shareholders that own over 10 million shares, or approximately 5% of the company. Gold Mining Inc. is strategically positioned to leverage record gold prices and address the industry's need for new discoveries. And if you'd like to learn more about Gold Mining Inc., please check out the symbol GLDG or goldmining.com. Palantir's AIP and Foundry creates instant satisfaction with proven results.
You know, when you think about who could be the next Oracle, the next Salesforce, I believe it's Palantir. That's why our view is...
So, what is Palantir going to do to grow even faster? Well, news broke a week or two ago about Palantir's partnership with Bain Consulting. And if you're unfamiliar with Bain, they happen to be considered one of the big 3 management consulting groups alongside of McKinsey and Boston Consulting Group. This news is probably one of the most important updates from Palantir all year. and it hasn't really received much love at all. Just so you know, Bain works with over 64% of all Fortune 500 companies, and they are the leading consultant firm for the private equity industry. And they are not just tied down to working in the United States. They have offices in over 40 countries, with a focus on Europe and Asia. I cannot stress enough how important this news is, and I'm shocked that nobody is really talking about it. If you've seen my past videos, you know that one of Palantir's flaws is their inability to market themselves. If you go to their website or look at any of their videos, they are extremely tech heavy, which does not translate well to the real world needs of most companies. The people responsible for investing in new software for a company are most likely non-tech people. Think about it. You have a board of directors or possibly the C-suite of executives that are making these types of investments. Now, you may not know this, but I used to be a vice president. I also worked in the tech industry, and I also worked in marketing. And when I talk with leaders today in Fortune 100 companies, they know of Palantir and they talk about them as a black box that makes systems better. But they don't understand all of what Palantir can do for them and their company. And this is where Bain Consulting comes in. Bain can be that bridge between the technical understanding of Palantir and bringing it into focus for the leadership of all these different companies. Since Bain is already entrenched with many of them already, they can create use cases about Palantir's capabilities and how it's going to save these companies money and resources from what the AIP Ontology and Foundry can do for them. They can literally give specific examples on how Palantir will solve existing known problems for the companies that they already have relationships with. And I can guarantee you that most every Fortune 500 company has multiple ERP systems with unique bolt-ons that are complete silos for the company. And this truly holds them back from automation. Once again, this news about Bain is really much bigger than people realize, because they also give Palantir instant access to private equity firms that Palantir otherwise wouldn't have access to. That, and Bain has a global presence to grow Palantir well beyond the 38% of Palantir's revenue coming from international business today. Now let's take a step back. Let's assume that the relationship with Bain is a huge success. I'm betting that McKinsey and Boston Consulting Group would love to line up to be the next in line to help drive Palantir's expansion. So this would be a win-win for all parties, because after having worked with McKinsey on several different projects, they are great at making presentations and working out problems theoretically, but they are horrible with execution. Palantir would make all these consultants look like rock stars because they could finally execute against all their fluffy talk. Once again, I have worked with McKinsey on several projects, and I feel very qualified to make those kinds of statements. Also, Palantir already has a relationship with Deloitte to help expand their reach, but we rarely hear any specifics about this. But I do expect that we're going to hear a lot more announcements about other consulting groups taking on the top of funnel customer acquisition for Palantir. Now, earlier on, I had mentioned Ontology being the powerful force behind Palantir. And if you're not familiar, Ontology is reference to a set of concepts and categories in a subject area or domain that shows their properties and the relationship between them. And that makes complete sense, right? Okay, let's say that we have a number on the screen. Just by looking at this, you can't really tell me anything about it. There's no context. So let's create some context. Instead of this simply being a number, let's make it a person. This is Bill, and he's a 28-year-old male and lives in Wisconsin. He is a son to his mother and father, and he's a brother to his younger sister, Jill. Bill also happens to be a pilot for Delta, and he's an avid skier. Now, let's go back to seeing Bill as a number that just lives in a database. That number is agnostic to all other data around it because it lacks context or ontology. And this happens to be the secret sauce of Palantir. It creates an ontology to provide definitions to object classes, properties, and links. And it adds logic around how objects can be completed or deprecated. This ontology becomes the binding mesh between raw data and the applications that use that data. Now, I get it, I am dumbing this down quite a bit, but for most everyone out there, you need some level of understanding about what makes Palantir different from a basic ERP. Because at the end of the day, an ERP or enterprise resource planning software manages the creation and the housing of data, but it doesn't really give it meaning or context. Because as Palantir systems give data context, they give it meaning. And once that meaning is established, then relationships between the data is better understood so that changes in any attribute of those data cascades across all other relationships so that the AI aspect of the system can provide automations and solutions to problems and updates to timelines in real time. And these are all the things that people today would have to run reports to try to interpret that data and give it meaning to determine the impact and next steps of whatever change occurred. In short, Palantir systems are like adding a 25% increase to your workforce based on the functionality it provides, meaning that any company that implements Palantir's AIP will rely more on it every day that they use it. And the Palantir systems get smarter with every day that those relationships become more concrete. Now, taking a step back and going back to Bain, now let's say that Palantir has great success with them funneling in new customers. Then the next big bottleneck is the deployment teams. And currently they have forward deployment engineers that go into a company to ensure that the system is built, launched, and serviced. Now, I've heard from many different sources that Palantir is working to greatly automate this process, speeding up the implementation and the launching of the AIP system itself. And of course, that only makes sense that they would be working to automate deployment. And if they can gain instant success on this, then really the world is their oyster.
One of our customers, a very large US insurance company, we've automated all of insurance underwriting. A process that used to take 2 weeks can now be done in 3 hours with a 78 agent AI model. And you can think about that as not just the time saved, which is the first order benefit, but the second order benefit if all of your competitors take 2 weeks to price risk and you take 3 hours, it's going to be a fundamental dislocation in the market.
On top of all of this news, Palantir announced a newer partnership with SAP.
Palantir is the maker of powerful data analysis software. And with SAP Business Data Cloud, our shared customers now benefit.
Those products and your products, we believe, will be extremely valuable.
And Palantir also secured a new contract from the Department of Defense worth nearly $800 million. And I expect that they will continue to gain more contracts from governments both domestically and globally throughout the year as everyone is looking to save money. And honestly, this is the easiest way to get a solid ROI on your invested capital quickly. So, bringing this all together, yes, Palantir stock price is severely overvalued today. I don't contest that at all. But I will continue to buy every major dip because anything 5 years out and further with them is a solid investment. Without a doubt, Palantir will make a lot of millionaires over the next decade. But please be smart and buy on the major dips because they will happen. You just need to be patient. As always, thanks so much for watching.